Yo, yo, what's going on? Kanoa here, Bulls on Wall Street. Hope everybody's having a fantastic week. You guys enjoying the last days of good weather for you Northerners. For us over here, it's still like 90 degrees and it's almost like fall's never going to come. But what can you do? It's the price you pay. I want to talk to you guys about something that's really, really important. And a couple people had asked me in our chat room about it, so I want to make a video on it. But it's going to take me a couple days to recover because I bungled up this trade so much that I needed 2 days to just internalize, why I did what I did and what I can do better in the future. So Roku, a lot of you guys have probably heard of this stock. Roku has been on a monster trend pretty much all year. This was like a $20 stock in the beginning of the year, got up all the way to $170. It was just the hot tech stock of the year. It's rare that you see like multi-billion-dollar companies go up like 300, 400% in a year, but here we go. I know a lot of you guys probably thinking like, man, I got a Roku box. That thing don't do shit, right? But here we are. That thing was flying, and in the end, everything that flies at some point has to come down. So Roku for the last 2 weeks has been in a monster dump. It's starting potentially a short-term downtrend that could last for a little bit of time till it finds some type of equilibrium that's going to get it back on track. But I want to talk to you guys about what happened on Friday and ways you can really manage this type of trade. I took the stock short on Friday. It had all the makings of an A-plus setup for me. So to review, like what would be an A-plus setup for most of you guys? So for me, like I have to know like what my patterns are. So for me, like an A-plus setup is, right, a momentum stock, a Momo stock. So that's something that's like, right, been flying up and down, trending during the year. So it's a Momo stock that has fresh news out. So Roku on Friday had this gap down, right? And so with this gap down, it's obviously got some type of news. It had some downgrades and some stuff going on, and then they had some news the day before that Comcast and Disney or somebody is making boxes to who knows, right? And so it's just getting hit with like kind of fresh news every couple days. But we got this gap down on the stock. And so right off the bat, if I've got a momentum stock that I like watching that has a gap, and I prefer on the downside because that's more my bread and butter. I just like shorting, and that's like kind of like a 2019 thing. 2018 was like more of a year to go long, but this year my numbers tell me I'm doing better at shorts than long. So for me right now, an A-plus setup is a momentum or trending stock that has fresh news. I prefer the ones usually between like kind of $20 to $150 that does more than 10 mil in volume. All right, so that's usually like my sweet spot. Okay, has a gap down on news, and then I'm waiting for one of my essentially one of my patterns. So when you see this stock, if you go on, and I use 2-minute charts at the open. But if you see this stock, like what ends up happening with this thing, and I'm trading live in my chat room in front of everybody all day on screen share just like this, I missed the first shred on this. You can see like this thing kind of just spiked down right at the open. It broke pre-market lows and dropped like $5, $6. Now, I could have hit that trade, but I don't know. My fingers were still loosening up. Who knows? The coffee hadn't kicked in, but I missed that, that early morning one. It just happened so quick. I was like looking at it and then right, it was gone. That's okay. If you miss a trade, you miss a trade. It's not a big deal, right? What I want to do is short that first bounce, all right? The first bounce is important. When you get that quick pullback, whether it's towards the VWAP or the 9 EMA, what you want to start doing is looking at the price action and the price pattern on the chart to zero in on a particular entry. So, I shorted this thing in the chat room at 123.16 on the first bounce. We've got a Discord chat over here. And I'm like, in this thing, just kind of hustling and bustle in front of everybody all day. It's a pretty cool room. We got a nice group of students in there that have been with me for years. So I take this thing down into this pop, 123, shorting basically as it breaks under the trend line. right? And I like to anticipate it just a tad. So I want to talk to you. The big lesson of this day was not really the entry, because entries is just one part of it. You know, everybody's so focused on entry, and then risk. But there's also that third part of the trade, which is managing the trade, right? That's the special teams of stock trading. So I got a great entry. Now, I know that the low is kind of at 120.81. So my thinking is, okay, if I'm going to hit this thing to 123s, I'm going to use probably 50 to 75 cent stop loss. I think the VWAP, you know, I always use an oh shit stop loss, which is like a physical stop loss that just says, oh shit, like if things go crazy and you can't get out. And then I have a mental stop loss. So I use an emergency stop and then a mental stop. So my emergency stop is over the VWAP, and then my mental stop is really just kind of at the top of the candle, right? So I'm risking like 40 to 50 cents. And my oh shit stop is at $1. I have a primary kind of first target of 120.81. And I know that like usually when I'm trading something like this, I'm going to have multiple re-entries throughout the day. So it's not just like a RR in terms of this one candle, right? I've got to look at the whole picture of things because I'm going to be kind of in and out of this thing. So as this thing shreds down, you know, I caught like 2 points on this thing and really a 2-minute candle. So in my book, anytime you're faced with like a nice solid kind of quick chunk, you always take it, right? So if you put $1 in my pocket, I'm going to take it. And that doesn't matter if it's 50 bucks or 100 bucks. It's not, has no mathematical sequence to it. I just know if I can keep taking dollar chunks throughout my trading day, they really add up to a nice day. And it just takes a little bit of the thinking out during the day. So I cover half my position at the lows with the thought that, you know, I'm going to look for a potential reentry. Now, this is where I screwed up. So as this thing started to kind of marinate, it's just marinating, it's looking zesty. You can see here, like, you know, you break down these lows over here and you get multiple tests, you know, kind of at this 121-ish zone. And, you know, it breaks down like $1 and then comes right back into the breakdown spot. So I'm already like, oh man, like here we go. Like maybe this thing's going to squeeze, but it hasn't shown anything on the chart yet to say I need to get out, right? So I've got a half position from 123, a half position in the 121s. I'm still sitting pretty. I got 122 average, so I'm still in the money. I just got to let this trade work out the way it needs to work out. Now, as this thing starts to shred down, you know, I always, now I'm at multiple dollars, I always want to take off, you know, half again. So, you know, I'm always going to be like, okay, cover off half, you know, into the flush. That's just my thing. Now, where I made a mistake on this was twofold. As the stock started to kind of get higher here and busted over the 9 EMA, you know, I ended up covering out the rest of my position. And immediately, like 2-3 minutes later, the shred was on, right? Where it just dumped another $3. You know, in my quest to manage my risk, I tightened up my stop loss so much that I ended up messing out on a really big trender that, I mean, got down to like 104. You know, my preference at stock like this is going to be trading, adding in like 500,000 shares at a time. You know, you've got yourself, right, that big chunk. But what I ended up doing was sitting there so zoomed in, fighting for pennies that I really missed the move for dollars. And so I end up covering this thing as it breaks over the 9 EMA on the 2-minute chart, but that's a mistake. And the reason is this: moving averages, they serve two purposes. They help you identify trends, they can act as support and resistance, but in the end, they're just imaginary lines. We use them as guides in a trade to help us manage the trade and identify trends, but they're not like the tell-all, like, okay, if it goes over this or under this, like I'm going to short buy. No, it's one piece of a puzzle. As traders, we're lawyers. We build a case. We take pieces of evidence, compile it in our favor to finally say, okay, this stock is worthy of my time, my capital, my mental capital, and a moving average is just one small piece of that case, right? You have multiple pieces of evidence that you really need to line up before you get out. In the end, it's the price. You need higher highs, higher lows for you to actually get out of the position. Just because somebody nicks over a moving average doesn't mean anything. But we're always taught as traders, like manage our risk, manage our risk. And I'm guilty of this too. Sometimes like we get so focused on not giving back profits that we miss out on the huge shred, and that's really important. We're so often thinking and trading because they have the kind of old adage, like you don't go broke taking profits, or, a win is a win, or, green is green, green is good. And I mean, most of that stuff is just junk because it applies like a good chunk of the day, but it doesn't really mean anything because in the trading week or month, you have to have multiple trades going where you're taking multiple times your RR. So say like you had a reward to risk ratio of 2-to-1, that's what you strive for. You still need over the course of a week some trades that are like 4R, 5R, where you're really taking in a big chunk. It's those chunk plays that pay you for all the small losses, all the 1-to-1R trades, your commissions, your taxes. These are all things that start negating your balance a little bit throughout the week. You need, for me, I know I need 3 chunk plays every week to hit my goals because there's going to be a lot of flat trades, a lot of small losses, and a lot of small gains. But I got to have those chunks to pay me to cover up all the mistakes, right? All the little things that happen during the week. So I made a handful of kind of mistakes on this trade. Number one was obviously too tight on the stop, right? I was too tight on the stop. I need to use price in conjunction with moving average, right? So too tight on the stop. What's the second thing that I could have done a little bit better? Number 2, not re-entering. That's I think one of the key mistakes. So my stats tell me that my best trades, I get in 4 times throughout the day. So I'm not just back and forth, but like I re-hit it multiple times. There's morning patterns, midday patterns, end of day patterns, right? So you have 3 stages to the trading day. So if a stock is trending, theoretically, you're going to have at least 3 entries. So my best trades, I do 4, because I'll probably have a couple during the open. So I didn't re-enter. As soon as this thing like remounted back under the MAs and broke this bear flag, right? Like I could just re-enter this thing, right? And come back into the shred. Even as it popped up over here, right? Like I have a re-entry. And then, later on, right? I've got multiple areas where I can come in and take risk, right? Even this is 7 points, right? 5 points. There were so many spots to re-enter. If you have a trender, then you have to re-enter. And so that was really I think the big mistake and big learning lesson for the week was not working a full day. Right now you're seeing like so much junk out there. Like people like, I only trade 30 minutes a day, 40 minutes a day, trade 1 hour a day, make full-time income with part-time effort, right? It's all just kind of hogwash because we're day traders, right? Day traders. So that means we're taking multiple trades throughout the day. And guess what? This is our job. This is my job. I have to be on the attack all day. But oftentimes we lull ourselves into thinking if we hit our profit target, leave. That's not really correct. So if you hit your profit target and leave, then the next day, you hit your max loss and leave, you just kind of end up being, after commissions, taxes, you end up kind of being in the middle of nowhere. You may have profit targets for what you want to make throughout the day. So say it's like $2,000. Well, just because you hit $2,000 doesn't mean you have to leave. It just means like, okay, now I've hit my goal, don't give it back, right? Because if you hit your goal, but you left 20,000 on the table, is it really a good day? No, it's not. The whole like, hey, let's work a couple hours before the market gets choppy and leave is completely true in some aspects of it. There are going to be days where there's nothing going on in the market, where your watch list is junk, the market is junk, there's just no trenders, your scans are throwing up nothing. Those are the days where like if you grind out some gains or you get close to your profit target, you bail, right? You can do your nail and Bailey thingy, whatever. But if you have a watch list and you've got trenders on them that are actually reacting to the patterns and moving averages and setups that you like to do, then you have to stay. And I made that mistake. It's Friday. I'm like, I got my head out here, and I made my profit target because I still took a couple points here and there on this thing. I'm like, oh man, good for a Friday. I'm going to bail. Well, you know what? On Monday, you know what happened? Nothing. The market, I took 2 trades, 1 win, 1 loss. There was nothing going on. And I'm just sitting there like, man, well, I had Friday to really hit it, right? On Friday, if I had made 2 times my profit target, that would have covered me for Monday. You know what I mean? Monday was choppy. Monday was the day where my watch list wasn't doing anything. And I had done a lot of homework. It just, my personal watch list just didn't have the juice on it. So that's the day where you make a couple trades, you don't see what you need. I had a little bit of green, I took off. But Friday, I had multiple stocks on my watch list that were trending, and I had hit my profit target, and I was like, well, let's just go. I don't think that's the right idea. So from now on, in future, for me, the lesson is going to be, I'm going to give myself a 25% give back. Meaning if I hit my profit target, but I got still stocks working in a recognizable way, then if I give back 25% of my profits, I will walk away. But what that'll do is it's like a stop loss on your account. What that will do is keep me in the game so that I can build for a bigger trade where I can get maybe 2 times or 3 times my profit target or even more. You know, in this particular case, I mean, this type of trade would have paid me for the month. You know what I mean? But instead, I get so caught up in green is green, green is good, that I didn't trade the stock correctly to its best potential. And that's what it's really about. Did you trade the stock to its best potential according to your style of trading? And for me, I did not. Even though I made a little money, it really wasn't anything. It was 2% of what I could have made on it. You know what I mean? So it's not really a good trade just because you made some money. So hopefully that helps, guys. Feel free to leave any questions or comments. If you have an idea on like what kind of video you want to see from me, let me know. I love chatting with people, and I'll make some new ones. And if you guys ever just want to chat with me, you can always hit me up at, in our chat room, in our Discord room, or you can email me, kunal@bullson.ws. Guys, we do YouTube Lives Tuesdays and Thursdays at 9:15. I know I see a lot of you guys in there, but I go through my whole pre-market routine and song and dance. So it's pretty cool. You guys can come in and kind of help me get a watch list together. We'll go through the scans. And then, of course, September 29th, I start my 60-day trading boot camp. This boot camp is an all-inclusive boot camp. It's everything you need to know from A to Z, what it takes to be a day trader and a swing trader, which is just short-term trading. One is for part-time traders. One is for people that want to sit in front of the computer like me and get stressed out, So I start that September 29th. If you guys ever want to chat about it, just hit me up. You got my email, and you can call me at the Bulls on Wall Street hotline. I'm the one that picks up most of the time anyways. Peace. Guys, if you liked the video, give me a thumbs up. Make sure to subscribe, and always leave comments and questions. Man, I love conversing with you guys. Even the ones that are telling me I'm a loser, I like that because I'm a big fan of public discourse. Take care. God bless. Good luck to the rest of the trading day, guys.